like in sports, like baseball or whatever, the best defense is a good offense. And so when you see something and you want to, this is a Warren Buffett thing too, right? So you want to have like 6 to 8 stocks. And when you see a stock like hitting that opportunity that like the pandemic's ending, that these people are starved to go on vacation, you have to take that, you have to bet big, And so you can't be like, oh, I'll try this a little bit, but you can, but if you want to win big, you have to bet big at the opportune time.
Right, and that usually involves doing the opposite.
No,
of
scary.
What, yeah.
If you have butterflies in your stomach, those are always my best performing stocks.
Really?
Yeah, absolutely.
Hello there. Welcome to the Angel Research Podcast. My name is Jason Freiert, and I'm here today with Christian DeHaemer. Welcome back to the show.
Well,
Christian.
Thanks for having me.
What's going on with this shirt here? Is this a soccer shirt or?
Yeah,
what's going on here?
That's a good question.
Sorry, football?
No, it's soccer from Bermuda. I was recently took my family to Bermuda.
Okay.
Big extended family. We rode on a cruise outside of. We left from Port Liberty in New Jersey.
Okay.
On the Celebrity Cruise Line, and it's interesting, and I like to go when I go places. I buy the sports shirt rather than I went to Bermuda or whatever. But the reason this is interesting to me anyway is because when we were going on the cruise, my wife's been booking this for a year, and throughout the year, as you wait on people to commit and whatever, the prices kept going up, and so I did some research and I was looking into it, and all these Caribbean cruise like Royal Caribbean and Carnival's part of Celebrity. Yeah, Carnival Cruise Lines, Royal Caribbean, and the other one is Norwegian.
Mm-hmm.
Anyway, they all got crushed during the pandemic, down 90%. And so, I started seeing these prices go in. They started having pricing power. They got popular. So I bought a bunch of it, and turns out I made so much money, I paid for, the entire cruise.
By investing in the stock?
Yeah, investing in the stock.
Which one?
I bought Royal Caribbean,
Uh-huh.
and in my newsletter, Launchpad Trader, my trading service, I recommended the Norwegian cruise line, and it's up, like 50% as well the past couple of months.
Yeah, everybody thought when COVID hit, it was like, oh, the cruises are done,
Right.
and then we're on back. I just went on a cruise for spring break. We did a Disney cruise.
Yeah.
And that was fun. So, and yeah, it was packed, and you have to book those things like far out in advance.
Right.
And once they started opening back up, it was like, yeah, people were like, yeah,
I'm in. Pricing power, and the oil prices dropped, and so, yeah, it's a good.
Excellent. How many people came?
We had 10. Yeah.
All right. Yeah.
Nice.
That's a little bit too much for me. So, CPI just came out.
CPI came out. It beat expectations on the downside, so people were expecting 3.1%. CPI stands for, what is CPI? Core
Consumer Price Index.
Consumer Price Index. It's the Fed's gauge of inflation.
Right.
Essentially what it is. And so it came out at 3% rather than 3.1%.
So not that much lower, but
Not
people
that much lower.
seem to act like it was, a big miracle that it was 3%, whereas, it still is going up.
Right. Well, yeah, prices are going up 3%, but they're not going up 9%,
Right.
which they were going up 8, 10, 12 months ago.
So what do you think this means for the Fed? They're gonna pause. They're gonna only do one rate hike. It seems to be that that was the big fear after high inflation.
Right. They were talking about hiking twice, right? 50 basis points. And I think they have to pause. I think they have to continue to pause and wait it out.
Yeah. So.
And so the market reacted very positively. It's the second day in a row it's up, or third day in a row. And if you look at the NASDAQ, I have a tri-directional indicator which uses moving averages, and it's screaming bullish right now. I think you can go from, we're at 14,000 up to 16,000 before you run into some pullbacks.
Yeah, a lot of our editors have turned bullish. You and some others have been bullish for a while, so it seems to be coming to fruition. Brian made a famous call back in November.
Yeah, he nailed it, right?
Yeah, he got a lot of hate, though,
Did he?
about 3 months ago
Wow.
when the market was going down, and then, but that's just the market cycle. So gotta stay in it to win it. Speaking of which, I think last time I was on Brian, and we actually were talking about this offline, and I just wanted to get your take on this sort of transformation of the wealth management business, right? I had a side conversation with a friend of mine, and they basically were complaining that a so-called money manager or financial advisor that you talk to now doesn't even pick stocks, right? They are just going to put you in, a couple of funds and then basically tell you to stay in there while they're collecting fees.
Right. So, yeah. So basically you have, traditionally it would be like, all the other popular athletes in, college and high school would, graduate, with their criminal science majors or whatever they were, and then like not have a job, and then they would, get hired out by all these major firms. And what they would do is sell mutual funds, but now that's sort of transferred into these guys. Say you do that for 10 years. After selling mutual funds, then you become a wealth manager. And what you do is you take 1% or 2% of somebody's money or a set fee, and then you just put it, they have formulas on their computer, and you say, well, how much money do you have? When do you want to retire? And then they, that spits out a thing, and then you put them in an index fund, essentially, and then bonds index fund.
Right. And, so you're basically just buying the market. Meanwhile, you can do that yourself.
Yeah, not only can you do that yourself, but you can save, a percent or two right off the bat, which adds up to, over 40 years. It could be like $700,000. And so not only can you do that, but traditionally, historically, you see this every year. It comes out that 90% of the fund managers don't beat the market. So you can buy the Vanguard fund and pay 0.017%, be the market. And you have a 90% chance of beating everybody else, so you're paying an extra point, or 2 points to.
Right. Yeah, it boggles my mind that people continue to, and I had a pretty in-depth conversation with Brian about this and how, his story of back in 2007 trying to get his parents' money manager to go into cash, and they were just clawing tooth and nail to get there. And it seems like once they get your money as a wealth manager, their goal then becomes to keep your money. Yeah. It's not necessarily to produce a certain amount of returns.
No, it's not. They know that if they lose money, then you'll pull the money out.
Right.
So what they want to do is lose just 3% less than, the Dow lost or whatever.
Right. So they can say, hey, look.
Well, we came close.
Yeah.
Whatever.
Yeah.
We did almost as well. Next year we'll beat them.
Right. Exactly. So that's when the redemptions come in and people want to pull, and that's where, like Brian's story of like the reluctancy to be like, no, like, you're panicking or all that kind of stuff. How much does the contrarian style, I was listening to Adam Grant actually talk about this, and he basically was saying that to make the contrarian bets that you were talking about, like with cruise lines, right? Mm-hmm. You have to have a certain conviction that it's going to turn around, and you also have to be willing to sort of wait out the trend, however long you think it is going to take, right? So imagine you doing the cruise lines, okay, or imagine a money manager saying that, and then their client is like, well, what are you doing? You know what I mean?
Right. Nobody's going.
Yeah. And
there's a pandemic.
Yeah. And so they're like, pull my money, you're not doing anything. And so they're incentivized to have the safest, most, risk-adjusted sort of returns in there because they don't want their clients to pull their money.
Right. Well, like in sports, like baseball or whatever, the best defense is a good offense. And so when you see something and you want to, this is a Warren Buffett thing too, right? So you want to have like 6 to 8 stocks. And when you see a stock like hitting that opportunity that like the pandemic's ending, that these people are starved to go on vacation, you have to take that, you have to bet big, And so you can't be like, oh, I'll try this a little bit, but you can, but if you want to win big, you have to bet big at the opportune time.
Right. And that usually involves doing the opposite.
No,
of
scary. If you have butterflies in your stomach, those are always my best performing stocks.
Really?
Yeah, absolutely.
Yeah, and not
like, I don't know, and you're like, oh.
And I think that's what the money management and wealth management industry thrives on, right?
Yeah.
That's the pitch. Don't you worry about it.
Right.
Like, let me worry about it.
Yeah.
You go, and the question is, like, who cares about your money and your wealth more than you?
That's it. That's right.
Right?
It's like your health even. It's like the same sort of thing. It's like you care about, nobody else is going to care about your money.
Yeah.
I mean, except for getting a slice of it. They care about that.
Right,
much,
exactly.
Right? But yeah, you should at the very least know, read 5 books on the financial, world and how Wall Street works and things like that. Or, you could get a newsletter, and
your newsletter?
We'll tell you how it happens and how it goes along.
Yeah, so you're typically writing for Energy and Capital, is that where
Energy and Capital, yeah.
So you had some good, the last few weeks I encouraged people to check those out, sort of touched on some like historically famous investors who oftentimes, almost always are contrarian investors, right? You don't, Michael Burry, is famous from The Big Short.
Right.
Like, he's famous because he literally was betting against like all
housing.
And all the conventional wisdom.
Right. Housing prices never go down.
Yeah. And so the way I look at it is, as much as a contrarian investor is about knowing trends and following the market and seeing like untapped potential, it's almost more about your psychology and your willingness to sort of, like you said, when your heart starts pounding and you're like, oh my God, maybe, what have I done?
Well, because what you're doing is you're, in the back of your mind is like, there's all of Wall Street. There's, I don't know how many people are on Wall Street, like 100,000 people that are betting the other side of this trade.
Right.
Can they be wrong? And you're like, well, yeah, but look, and you have the tables and the facts and everything's on your side. Otherwise, you wouldn't be doing it, right?
Yeah.
And so then you lay in your bet,
Yeah, as long as you're not doing super leveraged stuff where you need a particular bet to pay off in a certain amount of time.
Oh yeah.
Where they say the market can remain irrational longer.
Far longer you can. Yeah, remain liquid.
Yeah, yeah. And so that's where, like, in crypto and some of these that's where people got into trouble, is they're making these big bets on margin and,
Well, sure. I mean, you're, the market goes up over history, whatever, like 11% a year, 13% it changes. They're saying 7% since 1980 now. But the tide is with you. What you really want to do is not lose a big chunk of your money, right? So if you can maintain that tide, take 90% of your money and put it in the Vanguard, total stock market fund.
Right.
And then take 10% of that money and try to match the return you get on that other one.
Mm-hmm.
And then, and you can come close fairly often.
Is that what you do?
That's what I attempt to do, yeah.
That's what you attempt to do.
Sure.
And look, you can't go wrong, and the compounding money that you can make in the market by not giving your fees over to an investment
Like
advisor.
Warren Buffett says, compounding interest is the most magical thing on earth, or whatever he said. But yeah, it's like that. So if you're going to make 3% naturally compounded above inflation, if you're giving away 1% of that,
Yeah, that adds up.
Yeah,
that adds up. And I think people seem to think that, it's worth it for me to not worry about it. To me, the thing I enjoy about reading a newsletter and studying the markets is that you actually learn something, right?
Yeah.
So if you were to take, the past 2-3 years, right? If you were reading a newsletter, following the markets, not, all day like you and our other sort of investment gurus around here are doing, but just passively and actually learning about, inflation and the causes, like you come out of that actually with some knowledge that you can use going forward down the future. If you, on the flip side, if you had buried your head in the sand during the 3 years and just say, oh, my money guy will worry about it, and meanwhile, you're getting crushed in the market, which is
like your bond position.
Yeah, 2022 just crushed, and you're also paying additional fees. And some managers, pay. It's basically, I guess like 0.75, I think is the average. Some are like 1. I mean, some 1.5. Like some lower. But that seems to be the average. But it adds up after a while, and there's really no need to.
There's no need to do that. I mean, when you can get a newsletter for $49, telling you what's going on in the market.
Yeah, and you have multiple. If you have hundreds of thousands of dollars, or even a million,
if you have
$50,000. Then that's peanuts compared to what you're going to be paying that guy. And with a newsletter, you actually learn something.
And it's also like we don't make money unless our readers make money.
Right.
And so we're not beholden to anybody. We don't take any advertising, And so, we're not selling a mutual fund. We're not selling, anything other than our, our advice and our opinions.
You don't like it, you can go to another.
We'll refund your money.
Yeah, it's pretty cut and dry.
Yeah.
The other thing I wanted to touch on, which you actually talked about today, was the XRP situation.
We were arguing last time, about
we were.
Ripple
I think you came out because I don't think I thought they were going to lose, but they didn't. They ended up winning their case against the SEC. Was it
SEC? Yeah.
Okay.
Just this morning.
So they, So it's what, July 13th.
Yeah.
So they won the case. So
Won the case.
that means what? An XRP is not a security. Is that the deal?
Yeah.
Okay. So what do you think? I mean, it was already up 25%.
It's up 25% today. Yeah. Well, if you're in at 40, I'd take half profits and see what happens to the rest of it.
Yeah. So you're still holding long term. Maybe take.
I
a
like
bit
it
of
long term. Yeah, I'd take some profits off the table, but just because you made the right call, And but long term, Ripple's part and parcel of individual countries building out their CBDCs.
Right.
Yeah.
So you think, we talked a little bit about central bank digital currencies and the whole FedNow system, which is launching basically
any minute now.
Yeah. There was a list. And we could probably actually put the list in the description or whatever of all the banks that are sort of certified to operate this new payment method. And it's it's most of the banks that you have heard of. So it's not like it's some random banks like JP Morgan's on there, I think Wells Fargo.
Right. It's probably all the Fed banks.
Yeah. So exactly. Yeah. So you're thinking that Ripple might be a component to some of these other countries that might be trying to institute the same sort of thing.
That's according to all the articles I'm reading, is these countries are Ripple. There's a company in Ripple, the coin.
Right.
And so Ripple, the company, is out there building people's central bank digital currencies, and they're like, well, you got to use this coin, which we also
so that's sort of
own half of, or whatever.
Right. So that's kind of the pitch on there. Yeah. You know me, I'm not necessarily against XRP, but I fall in the line of the totally decentralized aspect of
Sure.
a cryptocurrency. But that doesn't mean both instances
Right.
are not going to exist.
Bitcoin
So,
halving's coming up.
yeah, I mean, so it's at 30,000. I think do you got any predictions? Do you got any predictions for Bitcoin?
Bitcoin?
Yeah, say this time next year.
Bitcoin
The
this
halvening,
time next
the
year.
halvening will have already taken place. I think it's around April of
Well,
2024.
let me think. Last time it went up 600%.
Yeah,
Each time it halves, it goes down, right? The first time it went up like 10,000, then it went up.
Yeah.
Anyway, so I think last time it went up 600%.
So let me say the peak then. The peak over the next doesn't have to be
the
what
next
exactly
peak?
what it is.
You want me to actually give a?
Yeah, I got one.
What do you got? 120?
I'm just going with a cool 100,000
100,
just
yeah.
because it's 6. That's what I think. The last high was 69,000, I believe, maybe 70.
So wait, if
So-
it goes up 300%, that's a 120, which is half of the 600% it went up last time. I'll go to that with
120.
mild conviction.
Mild convention. All right, it's a bet.
All right,
Winner buys
something.
something.
What? All right.
All right. I think that's good. You got anything else you want to talk about?
No.
Let's make it
okay.
a quick one. Get
All
back
right.
to work. Adios. Have a good
Later.
one. Like and
Stay
subscribe.
classy, Baltimore.
Like and subscribe. Bye.